Man, oh man, it feels like it wasn't that long ago since we were all talking about the banks collapsing and the problems going on with SVB and First Republic and all these different banks that were literally collapsing. But it seems they found some sort of patch to temporarily move it down. And we've gotten to that temporary time period with now First Republic Bank actually seeming collapsing, with their stock collapsing 50% in one day today because they lost more than $100 billion in customer deposits. So this bank is like the 13th largest bank, and it is having problems and looks like it's on the path to collapsing, and something's going to happen. A lot of people are talking that it's going to go into like the FDIC program or government receivership. So there's so many problems here, and it's crazy the solutions that they're trying to come up with for this too. We can see from all of this, First Republic Bank expected to be seized by the US government. So their FDIC is going to come probably do something with this, or straight up the government, and try and bail this bank out. Even though everyone's saying that it's not a systemic risk, but the government wants to bail them out. So, which one is it? Are they a systemic risk, or can they go bust because they're a bad business? Ideally, what should kind of happen is, if you're a bad business, you go out of business, right? And if you have more than the FDIC limit, which is $250,000 per account, most people have nowhere near that. But businessmen who say that they're the smartest people in the world might be keeping millions of dollars in that bank. And if you couldn't be bothered to make sure that your money was in the safest spot possible, then you should lose your money. You're not the great businessman that you say you are if you can't even do the simple parts of making sure that your money is safe. So both ways should work. And if it's a bad business, it should go under. It should disappear, and a good business will take its place. And you already know Jim Cramer was all over this, saying, First Republic's miserable moment is different from the 2008 contagion, which, from Jim Cramer saying that, not very reassuring. It's actually the exact opposite. It makes you think maybe this is just as bad or worse than 2008, right? Because Jim Cramer, basically, if you bet on the opposite of what Jim Cramer says, you're usually right. And he said here, saying there's one big difference between now and '08. This time, there is no systemic contagion. It's a miserable moment for First Republic, once a bank beloved by the rich and famous, but it's an all-clear event for everyone else. Which just makes you think, this is probably going to be some sort of major problem if Jim Cramer is saying that it's not. That's just a typical bet to take. Just take the opposite side of Jim Cramer, and you're probably on the right side. But he's been talking about this bank for quite some time, and it probably shouldn't really shock you that he at one point said that this was a safe bank and a great bank. You can see his tweets here. Last month, Jim Cramer said that First Republic Bank is a very good bank. And then the stock has fallen by 89% over concerns that the bank is of risk of collapsing. See, this is the Jim Cramer tweet. FRC is the new focus. Very good bank. And if you want to see on the chart what it looks like when Jim Cramer tweeted this and what happened to the stock price, then you got it right here. You can see where he tweeted it, and it is literally almost a straight line down. Straight line from when he tweeted it, little sideways, and then we're going straight back down again. And when you look at this, it's kind of crazy to see this bank is at like $8 a share or something right now. And they were not even, like 6 months ago, trading for $140 a share. So the collapse that this bank has seen has been insane. And it's not like this is a small bank either. This isn't some like community bank that's just, dealing with a small town. This is a major bank. Not a major bank, but a big bank. They're like the 13th largest bank in the US. So they're not small by any means. They had $200 billion in deposits. They've lost $100 billion of that because people are pulling their money out, rightfully so, because it seems like this bank's going to collapse. And even if you don't have, or even if you have less than $250,000 in your account and you're FDIC insured and you wouldn't have to worry too much about, getting your money back, you still don't want to deal with that headache. It's going to be a massive headache to deal with the FDIC and the government, and when you get your money back and how long till you get your money back. And if you have to pay bills, what are you going to do if your money's frozen? It's a lot easier. Take your money out, move it somewhere else, probably into a big bank, which is maybe the end goal here, to just bring everyone into the big four and kind of have a little bit more control that way. But the solutions that they're offering for to avoid this, I think to avoid like FDIC and going down that route, I don't know, why the big avoidance is there. The FDIC doesn't have enough money really to cover a lot of these banks. I think it has like tens of billions of dollars in FDIC funds, and this bank is down 100 billion. So, it's not enough money for even just this bank, but we can see this guy actually is talking about it, the solutions here. He goes on a pretty big kind of rant with Jim Cramer here. But basically, he says that what should happen is that these good, healthy banks should buy First Republic's banks, their bad loans that they have, at a premium. So not what they could get on the market for these bad loans, at a premium, to take them off their books and free them up, which makes no sense at all. Why would a healthy, good run business take on bad loans to save a unhealthy, bad run business? That solution is crazy. That's the thought, right? Like, oh, just have the banks buy their bad loans at a premium because they're bad loans. Obviously, that bank shouldn't have made those loans to begin with. If they're bad loans, don't make the loans. It's crazy that you're continuing to pump out heavy risk, and it makes sense for banks to do this because they've been incentivized to do this now. The Janet Yellen and FDIC and the Fed and everything have come out and basically said, if you're a systemic risk bank, then you get a full-on bailout at anything. So what's the point in risk management? Just go on and do the riskiest things, because that means you can make the most amount of money. And if it fails and you collapse, well, guess what? You get a bailout and you get to do it all over again and try again. And we'll leave on this tweet because I think it's kind of insane when you really think about it. Saying here that the U.S. banking system is so effed that the 13th largest bank is about to go under, and nobody is surprised. First Republic Bank had $200 billion in deposits in the fall. Now they are worthless. So just the first part of that tweet is crazy. That this is one of the biggest banks. It's the 13th largest bank, $200 billion in deposits. It's not small by any means. It's not a community little bank. It is a pretty well-sized bank. It's almost in the top 10. And they are going to go under. It looks like they're going to go under. And everyone's just kind of looking at this saying, well, that's how it goes. That's what happens. That is crazy that you are looking at this saying, this is insane. What led to happen to this? How can we fix this so that it doesn't happen again? But instead, we'll get the typical kick the can down the road, bail everyone out, have another cycle, and in 10 years, when the banks are collapsing yet again, we'll see how far you can kick the can down the road again. But that's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.